not this is a Grinch rally or the Grinch sell-off. This is not a Santa Claus rally. It's not going as planned, Tom.
It's not. I think investors have been a bit nervous since December 18th, the FOMC rate decision, and worried that the Fed may not be as dovish as investors previously thought. But I think fundamentals have remained intact. So to us, I think this is a bit disappointing, but it's, I think, a bit of profit taking, some hesitancy around the Fed. But I think it doesn't really change that 2025 is shaping up to have a lot of tailwinds.
So this just delays some of the continuation in a secular bull market that you've been talking about?
That's right. I mean, I think one of the lessons of 2024 has been we've seen periods of market wobbling and weakness. We know investors get pretty quick to turn bearish when that happens, but it turns out that these have all proven to be buying opportunities. I don't think there's a lot of signal to me that December's been a weak month. It is obviously disappointing because it should be a seasonally strong period, but if we end down even S&P 5,900 into year end, I don't think it just changes that in 2025. There's a lot to look forward to.
So what you thought might happen this year being put off. So what does that mean for next year? Let's say the first half of next year. What do you think we're in for? And, with valuations and where multiples are right now, with all that in mind, do you think it could be a really positive first half of the year?
I do think that one of the things that we're watching most closely is what happens to CEO confidence early next year. We know they've been cautious for the last 2.5 years. It's really evident in looking at measures like the ISM manufacturing that's been below 50 since October 2022. And that's highly correlated with S&P earnings growth. I do think that that's going to finally recover to above 50, kind of signaling that we're back into an expansionary CEO mindset. It is purchasing managers. On top of that, we have an incoming administration that ultimately is going to be viewed by markets as pro-business, and I think that reignites animal spirits. And I think the Fed is going to prove to be dovish. Even if they're trying to figure out where neutral is, they're still supportive of markets. It's a good combination for I think, upside for equity. So, in the first half of next year, I think S&P can get close to 7,000, and that's a lot of upside from here.
The semiconductor leader Nvidia has captured the attention of Wall Street professionals and sparked discussions among the larger investment community. Nvidia has dazzled with phenomenal growth driven by advancements in artificial intelligence, and the financial world is ablaze with rumors and predictions about one of the most fascinating giants in the stock market. Investors are keenly observing the company's next moves, and the intriguing plot of its Blackwell architecture suggests that Nvidia may be ready to double its worth once more in 2025. Watch this space to learn how this innovative chipmaker intends to surpass expectations and shatter stereotypes. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication. So if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
Tom, listen, you're Tom Lee, you don't worry about a whole lot of things. But I would say when we're looking at stocks that are up 550% and 300%, okay, there are paradigm shifts which will bring in a lot of money to new things. Is there any part of Tom Lee, not the drummer, that does worry that things are a little bit hot at 40 times forward earnings on many of these, like an Oracle, a name that we didn't talk about much for years?
At some point, valuation becomes a liability when the market isn't able to be surprised or the market has overpaid for future growth. But to me, the last couple of years is really a story where investors have been underpaying for technology and the amount of innovation. I think 2025 is a year where we're going to find the AI and a lot of these applications actually do sort of re-architect the way America does business, and it's vastly cheaper.
We're going to see AI in 2025, in my opinion, and many of these apps are actually redesigning themselves every year in 2023 and 2024 due to the increase in demand for AI-driven technologies. If you ever thought chip production was just another tech story, think again. This one has a twist worth noting in the stock market. Nvidia's success story is nothing short of captivating as attention shifts to 2025. The catalyst that's grabbing everyone's attention is the company's latest generation of GPUs, built on its groundbreaking Blackwell architecture. The Chronicles during their November earnings call, Nvidia's management declared that these Blackwell chips are leaving the manufacturing lines and entering the hands of customers. The takeaway for those who own Nvidia stocks, a hint that Blackwell GPUs are already sold out for a year, is like winning a golden ticket to Wonka's chocolate factory. This is a tsunami of demand exceeding supply, which any astute investor could interpret as a chance for exceptional market performance. To keep up with the rapidly increasing demand for Nvidia's AI chips, a Taiwan semiconductor manufacturing partner has pledged to double its capacity. In 2025, the advanced packaging capacity is expected to double to 660,000 wafers, according to IDC projections. Nvidia is reportedly vying for a larger share of this market. Picture the scenes on the factory floor, at Los Santa's workshop, as they race to deliver those high-tech treats to data centers all over the world. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts. So hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now let's dive into today's video.
You're right, Brian. At some point, it's a bubble. I don't really think that that's the word yet, because I don't find that much ebullience in our clients. I think our clients are still pretty skeptical about valuations, which is why I think valuations aren't really a problem just yet.
One point I'll just raise on the skeptical note, which is on the call for small caps, Tom, which a lot of people were on the small cap bandwagon this year, and there were times where that really worked, but I don't know if December's a preview of what's to come. Small caps are still down 7% in December as the S&P's gone flat. NASDAQ far outperforming on the year, the small caps. Everyone hoped this was the time where the rally would broaden out, but then when the Fed pared back how many rate cuts it was going to get next year, small caps didn't work. So what makes you think that this will be the year?
Well, that's a really fair observation, Sarah. Small caps really are probably the best expression of when they believe the Fed is cutting for the right reasons, and there was a rug pull in December. I do think your viewers have to keep in mind small caps may not have hit escape velocity yet, but their underperformance for the last decade is 91 percentage points versus the S&P. It's the second worst 10-year underperformance.
Given that Morgan Stanley predicts Nvidia could soar to $95 billion in revenue by fiscal 2026, investors should keep an eye on the projected shipment of between 60,000 and 70,000 Blackwell 200 service systems in the upcoming year, which could add up to roughly $120 billion to $210 billion for Nvidia. This could be game-changing revenue, likening it to the rock star of the AI tech stage. It looks very likely that Nvidia will surpass Wall Street's growth projections. Analyzing earnings, analysts predict that over the course of the upcoming fiscal year, Nvidia's profit levels will soar to an unprecedented 50%. With a combination of rising revenue from new chip sales and keeping good pricing power, Nvidia might surpass Wall Street's already impressive earnings, which would put its average earnings at $4.43 per share, a significant increase over earlier projections. High expectations, one may think that Nvidia's stock is like a hot pie where humor and finance meet, and the only thing left to do is to be careful not to get burned by the explosive earnings growth that is about to happen. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
Necessarily bullish. I mean,
Well, actually,
for the
it is
right
very
reasons,
bullish
right?
here. It's super bullish because if you go back to 1900 and use FAMA data, it's the second worst in history. If you take the three worst instances, never have small caps underperformed the next 3 years or 5 years. So what we've done is essentially discounted so much bad news. There's so much skepticism. I think almost everybody that talks about small caps says, well, they haven't worked, so they're not going to work. They're trading at a 10 forward PE. They're going to benefit from deregulation. 49% of small caps are cyclical stocks, which are really primed to do well next year. So I think that the probabilities for a very good year are high at a time when skepticism's high. I mean, isn't that what FANG was at the start of 2023? I remembered how many people said, put a fork in FANG at the end of 2022. They're done. And they just put in the two best years, I think,
As we come to the end of this exciting chapter in NVIDIA's history, it is evident that the stock offers a compelling growth story that is worth investing in. With a premium valuation expected, NVIDIA is well positioned to attract market interest through its upcoming expansion and innovation phases, while the overall market may produce slower growth rates. In this high-stakes investment game, the NVIDIA tale promises a major twist with potential for exceptional gains. Whether you're an experienced stock expert or an inquisitive market explorer, NVIDIA is still a chip that investors may want to stay on board. Forecasts indicate that if NVIDIA maintains its remarkable growth, ascent may be the key to enhancing portfolios. It might even double. Once more, fellow investors, what do you think about NVIDIA's intriguing future? Does this technology finally, if you want to know what firms like NVIDIA have been up to lately, click on the next movie on your screen. I'll see you there. Titan has a place in your investment portfolio for 2025 and beyond.